Wednesday, February 22nd, and we have touched the neckline. On the S&P 500 spider, you guys know I always start out with the spider. So on your chart on your right, the low of the day is slightly below the neckline, which is okay, especially if it closes back up above the neckline. And if you look on the left, we are making new highs for most of the day, but not completely. The highest high is just a little bit higher, right around 400.50. And here we are at 99.93, or let's say 400. So a half a point more rally is going to start making new highs for the day. Again, after a very important critical test of the neckline. This could be the beginning of the rally that's going to make new highs for the whole trend, that is going to cement to a greater degree in people's minds and the public and the market in general that we have started a bull trend. I believe we have done that. You know that I've talked about this head and shoulder bottom starting in June, having the October 13th great October lows. That's seasonal, right on the time frame. Bullish engulfing, ER, official buy signal. I caught the bottom of the market to the exact day, and that's why this strategy is built. To pick substantial, major, significant turning points. Yeah, we make mistakes, but we don't take very big losses. And the ones that are on the money are, well, perfect. All right. I don't think I'm going to get a bullish engulfing out of this. I might, if we can get above yesterday's high. That would not surprise me. Now, it's not going to be an ER official buy signal and turn green, because we weren't low enough for the oversold condition. But in many of the indexes, especially the DIA, we were below the traditional 30 level, which is where Wells Wilder liked to call it an oversold condition. And I knew Wells. He taught me RSI personally. I use 25, not 30. And that's why I have a green line at 25. Look how many times when we touched 25, we ended up with a bottom of the market that same day or very, very close to that date. October 13th, of course. Nice big rally in here. That was around September 28th. And just looking at any yellow below the green horizontal, it turns out to be a market rally starting point. Now, sometimes the rallies don't last very long, go very far. And sometimes they're October 13th, the lowest low for the bear market completely, and so far the very beginning day of a brand new bull market. Yeah, can't get more precise. Again, I like the way the S&P is acting right now. We're getting a little stronger. We're higher on the day by a point, not very much. I'd like to see it start to make new highs for the day. That's still not very much. The ultimate would be getting above yesterday's high, and that's about 3 points away, four points away, not without possibility. That would be a bullish engulfing, and at least some of these indexes got below 30 for oversold in the old traditional sense. Not mine. I'm a little bit more strict about my overbought and oversold situations. Plus, of course, I use a custom RSI. Plus, of course, I use a custom bullish engulfing candlestick. Let's go look at the DIA. All right. On the daily charts, we're still developing that last big shoulder to finish the, excuse me, head and shoulder bottom on the DIA. It has a slightly upward slanted neckline, so it is going to be going up and up slowly in order to break out above, I'm going to call it in a few days, the very low 350s, 52, 352. Above that, you're in a breakout situation, which the QQQs did first. It's already broken out by a lot and is in good shape. We'll show you that in a minute. Secondly, the spider is broken out and just tested this morning the neckline pretty darn accurately, just a squeak, maybe half a point below the actual exact number. You don't always want to be too exact when you're talking about technical analysis, as long as you're in the ballpark and you don't have any negatives to contradict what you're expecting technically. And I don't. I like what I see. All right. The DIA here could have a bullish engulfing also. It won't be a green ER buy signal, but the next best thing. And in a bull trend, you don't get oversold all that often. In a bear market, oh yeah, you get oversold a lot more often. Markets just kept heading south. In a bull trend, the downside corrections are not as severe, not as bad, not as quick, and you won't get the severe oversold conditions as frequently. So getting close to may be good enough. Interesting observation. We got close to. Look what happened the last time we were down here, real close to 25. The date was December 19th, and it was the low of the last shoulder, and it turned up substantially over a few weeks. Now we've gotten down close to, but not quite the 25 level, at least below 30, 2760, I believe, is the RSI low. And that's this morning. So that could do the trick. I would not be surprised. I am tempted to outright say this is the turning point. I just don't have quite as many positive pieces of evidence as I'd like, but they're starting to add up. And that's exactly the way things start. So I like the DIA. There's nothing wrong with it. And I think maybe we're looking at the last low today, the low, before we're making new highs for the whole trend for several months, many months, in the next few weeks. I'd call it before the end of next month, before the end of March. Maybe a lot sooner than that, but at least during March. Same thing goes for the QQQ you're looking at right now. We're nowhere near the neckline, nowhere near the old bear trend line. The Qs broke out, what was it, on January 23, came down, tested the neckline, ran up substantially, got overbought on an upside gap, I might add. It was an exhaustion gap. I'm sure I mentioned that at the time, but that was February 2nd. Today's the 22nd. But we're now almost oversold, pretty close. Not, well, actually not all that close, because it's been much stronger, much quicker, and so it needed to come down a lot more, a lot faster, and it didn't so far. Anyway, the bottom line here is, again, I think it's turning. All of the indexes may be turning up today. If I were to go long, I would use some sort of a protective stop slightly underneath today's lows. The risk factor would not be very high, and see what happens. Again, I personally don't have enough evidence to really like that 100%. I do not want to use the word recommend, because I'm not recommending. I used to have a broker's license 35 years and be under the government's rules and all that, but now I'm just a regular citizen with a hell of a lot of technical analysis experience. So yeah, look at it closely, consider it. I like what I see so far. Obviously, if it turns around and starts to sink, that's going to start to wash away my bullish expectations or pieces of evidence. We'll see what happens. Hey, we have two new futures signals, one yesterday and one this morning, that I want to talk about in a few minutes. Here's the 10-year notes. Now, you know, interest rates have been a very important factor with the market going up and down overall, obviously. Now the marketplace is thinking, have we seen the lowest level for the bond futures, which means the highest levels for rates, or are we in the process of topping out in rates and starting to swing back down again slowly during the next several months? I'm going to say 6. The next down move in interest rates may be at the very end of this year or even the beginning of next. But markets move on anticipation and reverse on realization. I love that one. That's an oldie for me. I'll say it again. It's buy the rumor, sell the news, by the way. But that's only go long and get out. Mine goes long and gets out, or goes short and gets out. Trade the expectation, bullish or bearish. This is bullish, and reverse on the realization. Okay. I think bonds are bottoming out. I think they're starting to turn back up. We've been oversold for a few days. It got down to a very, very low RSI level, the lowest since October 3rd, late September 28th, when it turned up for a week or so and kind of started this whole big sideways move. Yes, it went down some more later, and then it went up some more. Then it went down a little and up a little and down a little. So we don't have a trend anymore. Since basically September, October, most of the price action has been sideways. You got most of the tops around 115, 16. You got most of the bottoms in the area of today's lows to a little bit lower, and that would be 11 down to 110, 9, something like that. So the long-term bullish breakout would be obviously getting up to 16 and higher. If this goes up, rates go down. So in the last couple of weeks, people were kind of expecting a little bit more increase in rates on a short-term basis. Let's look at 10-year notes. It's going to be the same thing. This is natural gas. How come I did? Oh, here we go. This is 10-year notes, and I already skipped over. Well, I guess I'm going to have to come back to the 10-year notes. This is the 10-year notes, and I come back to the 30-year long bond, which is almost identical. Here's our brand new buy signal in natural gas. Natural gas has been flirting with oversold conditions since the beginning of the year. It never had a very good rally, just enough to get out of oversold a little bit. Now we had, in the last few days, another jab down. This time, it got below 25 RSI, custom my ER RSI, and this is a bullish engulfing price range. All we have to do at this point is to close higher on the day, and obviously continue to go up in the next days and weeks to come. This rally could easily be pretty significant. I would be thinking up to, say, 4.5. And remember, we're currently trading at 2.386 last tick. Pretty much high and last, or almost. That's a heck of a big rally. Back to the same levels we're at on December 23. Okay. New bullish buy signal in natural gas as of today, February 22nd. Let's see how it turns out. Next chart. We had a brand new yesterday sell signal in wheat. I like to point out the fact that we caught the top of the wheat market a year ago when the war started. And wow, what a fantastic sell signal we got on March 8th. We had another one that wasn't the highest high for the rally, but it was very close. And it worked. Both of them worked great. Not too many other signals. Well, no other signals, in fact, since then. And now finally, after all this time, we're getting another sell signal. And this looks like it's working great. We're down significantly. Yesterday was the sell signal. It's not wasting any time. We could, and I think we're going to, make a new low for the whole trend below 708 very soon. My protective stop is at 773-ish. You come up with your own number, but probably should be in that ballpark, in my opinion. And we're currently trading at 26, excuse me, and a quarter. So I wouldn't sell it here. I would be trying to sell it a little bit above yesterday's low if we can have a rally back again. Please remember there are two strategies. ER1 makes the trade the day it turns red or green. So we're already short from yesterday with ER1. ER3 likes to get into the trade on a retracement, which we didn't get quite enough of today. And I got a couple more days to have that retracement occur. We'll see what happens. Next, heating oil. We caught the top of the market on the rally on January 24th. We have a test of lows a couple days ago, significantly lower day today. And I think we're about to break into new lows, which is going to be a new low probably since September. And that's not very far from the lowest lows since April of last year. You see new lows from April of lower lows than April of last year. We've got ourselves a gigantic top formation and a long-term bear market highly likely to begin. We've already gotten a couple of sell signals smack dab on top of the rally, which is, of course, the beginning of the move down. So let's see how that pans out. Crude oil, pretty much the same comments, except we're already making new lows for many months. A couple of months ago, we had a very nice sell signal almost on top of the rally January 27th. By the way, we did catch the second high and a broad double top on June 14th to the exact high. Love it. Okay. I'm getting an alarm going off here on the spider. Let me take a quick look here. Okay, hey, we're making new highs for the day as we speak. We're high and last for the whole day. We're not, we're only $1.50 higher than the previous close. I'm going to raise my alarm line here way up here, because if you get up to 404.20, and we're currently at 400.50, so we got 3.5 points or so to go. It's not that bad. I got to change one more thing. Sorry, ladies and gentlemen. Let's just kill that alarm line. I have two of them in there. And I like what I see. I like the way it's acting. Good. That's how they begin. Going back to futures, sorry. So we caught the top of the market on the second high and a broad double top on the crude oil to begin the bear market to the day. Don't try that at home alone. Next chart. Again, gold. We caught the top of the market to the exact day ever since the lows were occurring in September and October, and that was February 2nd. It's been going down since. We had a second sell signal. We had a false buy signal that lost a little bit on the way down. Just a couple of days ago, we made new lows for the whole trend down. I'm still bearish, looking for lower levels. Frankly, looking for 1,800 and lower. But hey, at the moment, we're oversold. Don't go selling short when you're oversold. You're asking for trouble. So maybe a little rally for a few days, alleviate the oversold condition, and then a really good selling short opportunity. Next chart. Corn. Boy, that trend line just won't get broken. We have a great trend line across the highs from April and, of course, the highs in September. Ever since then, we had one more, 2, 3, 4. Now, yesterday, 5 tests of that major bear trend line. When it is broken on a closing basis and we start seeing closing prices around 690, 691, that should start a major bull move to attack the highest high for the whole last year and more. So I'm trying to turn bullish. I need to have that breakout, and I'm waiting. We did catch the bottom of the break back here on December 7th. Next. Kind of neutral. This is cotton. I'm going to skip it. Cattle still bullish, no pun intended. Neutral to bullish on that. Coffee still bullish on coffee, but overbought. Watch out. Neutral momentarily on sugar. Slowly bullish on soybeans. Well, this could have a strong pop up all of a sudden. We had a decent sell signal. It worked for about a few days, and then it came back all the way. But that was definitely a profitable trade and signal, of course. Next chart. Overbought conditions, and pretty darn overbought too. We got way up here to almost 90 at 89.17 on the RSI. So I think it's going to come down some for a few days, and the trend will continue upwards after that. Next, soybean oil. Neutral, nothing to say. OJ, well, I remember very much so warning you about not going long a market that's going straight up. This got the most overbought I've seen on daily data charts of any chart in years. It was 97 or 8 or something, 98.24. Oh my God. So it collapsed in 2 days. Bam, blowing out a full week's worth of gains before that in just 2 days. So no surprise that happened. That's exactly what I was expecting. And now it's starting to go up again. The long-term trend is up. We're not overbought. There's room for it to go up even more. Next. High grade, neutral to friendly. Next. Bearish, looking for lower lows in platinum. And of course, we got the top of the market on January 11th. That's when these lines, bars, vertical bar chart, it works the same way on candlestick chart. I plot my candlesticks as white completely, unless there's an ER buy signal or sell signal. Then they turn red or green, just like you're looking at on this chart. We picked a top on that. We picked a top there. We picked a top there. We picked a bottom or almost the lowest low there. We picked a great sell signal there. We picked a couple of incredible sell signals way back September. Well, I don't know. When was that? Excuse me for a second. Oh, yeah. Whopper. Oh, even more going back in time, as it should be, I would hope. And that was March 8th, 22. Okay, next chart. Live hogs. Don't care for Miss Piggy at the moment. Next. Silver. Buy signal 2 days ago. We've had higher highs since. Coming out of the oversold condition, I think we have more of a rally coming. Remember, gold was also very oversold. So now I think that both are starting to work their way higher. Got a buy signal in silver at the bottom and a retracement so that we can get into an ER3 trade as well. It's down on the day at the moment, but one might consider being a buyer right around here. The protective stop I'm thinking should be approximately 21.15 or a little lower maybe. But you've got your risk established if you can get along here. Your upside objective should be at least a test of this resistance area, 23.30, I think. Next chart. Bonds. It's a little out of place. Came down, tested support, got oversold, and it's been mostly oversold for the last, what is this, 7, 8, 9 days or something? It's ready to turn back up like the 10-year notes. Higher on this chart means lower actual rates. They're inverted. Next, E-mini. Slightly above what I consider to be the proper neckline. I didn't draw it above that high. I drew it above, and I probably should either, raise it up a little bit across this point right here. And we just like the S&P 500, clipped the line just basically, and now starting to head higher. Okay, we're up 115 right now on the spider at 400.24. I'm keeping an eye on that. Next chart. Higher at the moment. Have an outside, well, no, we don't have an outside day yet, but if we do, we're going to have a buy signal in the 10-year notes. Okay, I think I went around in a circle here. Yep, I certainly did. There's my buy signal again on natural gas. And now I'm going to take a quick look at sectors. If the spider and the DIA and the Qs and the Russell, etc., are trying to turn up, you should see some evidence in many sectors that they're trying to turn up. And in particular, maybe the precious metal sector, because after all, gold's oversold and silver did give us a buy signal a couple of days ago. So let's take a look. I'm just going to give you the symbol XLK. Nothing really to say there. XLF, trying to turn up a little bit and almost oversold. Not quite, super close. So probably a little rally. VN, that's XLF. Now VNQ. Wow, so close to being oversold for the ER, which is 25, not 30. And I think it's trying to turn up. Hey, the trend is up in the first place. Next, trend is up, not oversold, not even close on XRT. No signal inside trading range day. I think it's going to turn up. Next, no comment. Next, oversold, period. Price turns yellow. RSI turns yellow. It's a warning, just like a traffic light. That's why it's yellow, that the market is trying to turn. In this case, oversold means it's trying to turn back up. Let's see what happens. Next, SMH. no comment. XLK, no comment. XLY, also no comment. XLF, almost oversold, below 30, almost below 25, not quite. And I think it's going to turn up some. Next, XLI, no comment. Next, GDX, gold. We have a lower low and a higher quote at the moment, and we were super close to getting oversold at 25.49 for the low RSI reading today. There's a chance we could have a bullish engulfing here on this sector. If that's true, we will have a bullish ER buy signal, first one in quite a long time. As a matter of fact, I don't see any. I see a lot of sell signals. That was great, the top of the market. That was great, top of the market. This was the day before the top of the market, so the actual rules means that didn't work, but it gave you a warning. Probably the market was going to turn down. So I'm looking for a rally. We haven't closed, so I think there's a chance the market could still rally even more than it has so far. Next chart. That was GDX. I'm sorry. Here is GDX. What was that one? XOP. I was yapping about XOP. I'm sorry, I get the wrong symbol. So I just talked about XOP. I'm going to GDX. That's the gold. It's oversold like crazy. New low close. Prime target for a turn up. Next. OIH. Oversold. Prime target for it to turn back up. XLB. Almost oversold. May turn back up. XLV. No comment. XLE, oversold, trying to turn back up, almost unchanged, about one tick higher on the day right now on XLE. Now XLU, no comment. IBT, no comment. KBE, no comment. VNQ, almost oversold, super close. Could turn up. Next, XHB, no comment. XRT, no comment. And lastly, XME, no comment. Do you see what I'm doing? I'm really only looking for overbought, oversold, which is the prime reason for having a potential market turn. Now, yeah, you get them all over the place, but they don't necessarily lead to very much of a move. The oversold, overbought conditions frequently lead to much bigger moves up and down, and especially if they have a bearish or bullish engulfing. There's a bearish engulfing. This one actually didn't work exactly the way it's supposed to, but there's a bullish engulfing. Same commentary for that. It didn't work at all, as a matter of fact, and it was a slight losing trade. That's it. Thank you very much. I think the stock market indexes are starting to turn. Let's look one more time at the spider 1 minute chart. Okay, it made new highs by a very small amount and settled back a little bit, but on the 1 minute, we got overbought. So, hey, it's normal for it to turn down for a very short period of time. I'm talking 10, 20, 30, 40 minutes, an hour. But the trend is up since earlier this morning when we made a lower low for the move down and tested the neckline, and that would be this low right here. So far, the low to remember is 397.62. Have a great day. Profitable trading to you.